Welcome to The Explainer. Today, we are diving deep into the world of futures and options trading. It's a world that holds this incredible promise of massive potential, but also, as we're about to see, some very significant peril.
Okay, let's just jump right in with a fact that should really grab your attention. A 2023 study from SEBI, that's India's market regulator, found that a staggering 9 out of every 10 individual traders in the F&O market end up losing money. Yeah, 9 out of 10. And if that number wasn't sobering enough, the same study found that the average loss per trader was over 1 lakh rupees. So what does this tell us? It tells us that even though F&O trading is incredibly popular, it is a brutally challenging place for the average retail investor. So the big question is, why? Why are so many people losing money? And probably more important for you, how can you approach this market with the right mindset and the right knowledge so you don't become just another one of those statistics? Well, let's get into it. All right, so here's our game plan for today. We're going to start with the absolute basics of F&O. Then we'll tackle the most critical concept, leverage, that double-edged sword. After that, we'll look at a few simple starter strategies. And then we'll get to what I think is the most important part, the essential rules of risk management that are really designed to protect you. So first things first, let's make sure we're all on the same page. What in the world are we even talking about when we say futures and options?
Both of them are what we call derivatives. And the name itself kind of gives you a big clue. Their value is derived from something else, an underlying asset. Now, that asset could be anything from the stock price of HDFC Bank to the Nifty 50 index, or even commodities like gold.
Okay, this slide right here highlights the core difference, and it's absolutely crucial. A futures contract is an obligation. You have to buy or sell at the price you agreed on. No choice. But an option gives you the right, but not the obligation. You pay a little bit of money, what's called a premium, for that choice. It's a fundamental distinction you have to understand.
All right, now we are getting to the absolute heart of F&O trading. This is the single most important and, frankly, the most dangerous concept, leverage. This is the engine that can create those massive profits we hear about, but it's also the engine behind those devastating losses.
See, when you trade F&O, you don't actually pay the full price for all the shares. Instead, you put down a kind of security deposit with your broker, and that's called a margin. This small chunk of money lets you control a position that's worth much, much more. And that's the power of leverage right there. Think of it like using a small lever to move a giant rock. It's an incredibly powerful tool that lets you do things you couldn't normally do. But if that lever slips, that giant rock is coming down hard. Leverage magnifies everything, both the good and the bad. Okay, this chart just brilliantly illustrates that amplification effect. So look here. To buy 500 shares of HDFC Bank the old-fashioned way, in the cash market, you need the full amount, over 8.5 lakh rupees. But with futures, you just need the margin, maybe around 1.7 lakh. Now watch what happens. If the stock price goes up by 5%, your profit is the same in both cases. But your return on your invested capital, it skyrockets from a nice 5% to a massive 25% in the futures market. But, and this is the big but, the same thing happens on the way down. That 5% dip in the stock turns into a painful 25% loss of your capital.
And that right there, that is the core reason why 9 out of 10 traders lose money. They get lured in by the dream of those amplified 25% profits, but they are completely unprepared for the reality of those equally amplified 25% losses. All right, so now that we have a healthier respect and maybe a little bit of fear for the risks, let's actually look at a few simple strategies you can use depending on your view of the market.
Let's say you're bullish. You think a stock or maybe the whole Nifty index is going to go up. The most straightforward play here is to buy a call option. And the beauty of this is that your risk is capped. The absolute most you can lose is the small premium you paid for that option. But your potential profit, well, that's theoretically unlimited.
And on the flip side, if you're bearish, you think things are headed for a fall, you can buy a put option. This lets you profit from that downward move. And just like with the call option, your risk is defined from the start. It's limited to just the premium you paid, no surprises.
This strategy, hedging, is actually how F&O was originally intended to be used. It's not just for speculation. If you already own a bunch of shares, you can buy a put option on that stock, basically as a form of insurance. If the stock price tumbles, the profit you make on the put option can help cushion the blow to your portfolio.
Let's be really clear about this. Having a strategy is great. It's half the battle. But the other half, the arguably more important half, is all about discipline and having strict rules for managing your risk.
I want you to really let this sink in. Every single trade you make has to have a purpose and a plan. If you don't know exactly why you're getting in and where you'll get out, you're not trading. You're just pulling the lever on a slot machine. You're gambling, period. Think of these as the non-negotiable laws of survival in this market. And I want to highlight that second one. A stop loss is mandatory. It is your most critical safety net. It's the line in the sand you draw before you enter a trade, where you decide to accept a small, manageable loss to prevent a truly catastrophic one. This is the real secret that separates the pros from the amateurs. The pros aren't focused on trying to predict the future. They focus relentlessly on the things they can actually control: their entry point, their exit point, and exactly how much money they're willing to risk on any single trade. So, we've covered the tools, the incredible dangers of leverage, and the rules you need to survive. Now it's time to bring it all home with our final checkpoint. When you boil it all down, this is the formula. Success here isn't about getting hot tips or trying to hit some massive jackpot. It's about having a solid process and then having the mental discipline to stick to that process every single day, no matter if you're winning or losing. And that is the ultimate takeaway. So many people see F&O trading as a get-rich-quick scheme. The reality is, it's a serious profession, just like any other. The only path to potential long-term success is to treat it like a business. A business you have to learn and study and practice. So, I'll leave you with that one thought to ponder. Ask yourself honestly, are you ready to put in the time and effort to learn this incredibly complex field, or are you just here to try and earn some quick cash? Your answer to that question will probably determine your entire journey in the market. Thanks for watching.